So today we are learning about SACCOs. So SACCO in full stands for Savings and Credit Cooperative Organization. Savings meaning that you can save regularly, credit meaning that you can get affordable loans, cooperative meaning that it's owned and democratically controlled by its members. Each member equals one vote, doesn't matter the amount of money you have in the SACCO. And organization meaning that it's a formally recognized entity that offers financial services to its members. So essentially, a SACCO is a member-owned cooperative where members save money, get affordable loans, and share in profits through dividends and deposit rebates. So think of it like a community where members help each other grow financially. There are two types of SACCOs, the DT SACCO and the non-DT SACCO. DT SACCO meaning deposit taking SACCOs. These ones, they offer front office services and back office services. Front office services are the services like the ones banks offer. Like for example, you can receive your salary in the SACCO. You can deposit and withdraw your money. You can use an ATM, you can do mobile banking, and the back office services means that you can get a loan, you can save, and you can also invest. And then the non-deposit taking SACCOs, they are the SACCOs that only allow you to save, to get loans, and to invest. They don't offer the front office services and the back office. They only offer the back office services, not the front office services. Yeah. So before you join a SACCO, what are the questions you should ask yourself? Number one, you should ask whether it is regulated by SASRA. SASRA is SACCOs and Societies Regulatory Authority. Yeah. And then the second question you should ask yourself is, what are the requirements? For example, what is the minimum monthly contribution? And then another question you should ask yourself is, how are they paying their dividends and their deposit rebates? Like, what is the percentage, so that you can see how much profit you are likely to earn in that SACCO. And then you should also ask yourself, what is the minimum share capital? Like in some SACCOs, the minimum share capital is like 50,000. Not that they ask you to contribute for it once. Like you can contribute 2,000 until you get to 50,000. Then you can decide whether you want to own more shares or just to stop at that. And then you should also ask yourself, how much can members borrow? Like some SACCOs allow you to borrow up to 3 to 4 times of your savings. So if it only offers up to 2 times, and you joined this and you want to join a SACCO so that you can get loans, it means you shouldn't get into that one, because you're not going to get the maximum benefits. And then another thing you should ask yourself is, do they require guarantors or collateral? Most SACCOs right now require guarantors, around 3 to 4 of them. So that means before you join a SACCO, you should get 2 to 3 people or 3 to 4 people that you know, or your friends, so that when you need a guarantors for a bank or for a loan, they are going to guarantee you. And then you should also ask yourself, if you want to leave that SACCO, how long will it take for you to get your money back? It depends also on the SACCO. Some take from around 60 to 90 days, others even 2 weeks, depending on the stability of the SACCO and the cash flow. And then finally, you should also check on the reputation of the SACCO. So because you would want to know the financial stability of that SACCO. Yeah, some SACCOs have failed before due to mismanagement. So you wouldn't want to risk losing your money at some point. And about SACCOs, the benefits that I've seen there are one, you can develop a savings culture, because now you have to contribute monthly and regularly, that is monthly. It means that saving becomes something that you do automatically. It's a habit, not an afterthought. And then you can also get affordable credits. You can get loans at lower interest rates, and also because they charge interest on the remaining balance, it means they are cheaper. Yeah, but also there are risks of being in SACCOs. There's no investment that doesn't have risks. So in SACCOs, there can be defaulters, people who fail to pay their loans. So it means if they don't pay their loans, the SACCO will get less profit. So the dividends you're going to earn and the deposit rebates will be less. And then some SACCOs have poor management and fraud, and others If you want to take your money back, they can take some time. So if you would like to liquidate your money, it becomes difficult. Yeah. So before joining a SACCO, make sure that you do your due diligence and research on that particular SACCO before joining it, because you want to get the maximum benefit out of the SACCO. Yeah.